The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Oh, happy Monday, everybody. Welcome to Squawk Box Europe. You've got Juliana Tadabam, you've got Karen Cho, you've got myself, Steve Sedgwick, a full cast and some headlines. So, the President of the United States, Mr. Trump, says countries will receive tariff letters from 5 p.m. London time, as Treasury Secretary Scott Bessent confirms the measures come into effect from August 1st.
Eurogroup President Paschal Donohoe tells CNBC he's optimistic the EU can strike a trade deal with the United States, as the bloc eyes a skeleton agreement that keeps a 10% levy on most exports.
And I'm hopeful that an agreement can be reached for next week. But none of us can be complacent. We know how difficult it can be and the twists and turns that can happen. But I know the Commission are doing an excellent job on our behalf.
And Elon Musk announces plans to launch a new political party, drawing the ire of President Trump and raising questions about his business commitments.
Morning. Weekend Bond, good weekend. I have to say Bond because you were in France at a shishi wedding in Burgundy. I'm surprised you made it back.
Oh, it was a good weekend away.
Yeah, it was interesting. I saw the pictures. Shame about the lederhosen. Not you, the groom. How was your weekend?
It was wonderful.
You were partying, I know that.
Actually, I got out of an escape room, which was fun.
Wow.
Well, the number of 10-year-olds.
Did you want to get out of the escape room? Depends who you're with, doesn't it?
I was with a number of 10-year-olds, so yes.
Not more importantly, great. I'm glad we had a great weekend.
And you were just stationary sitting around the weekend, weren't you?
Yeah, just doing that. Don't like to talk about my trail race. But in all seriousness, our job is to inform, to update, to clarify on the top news stories. And the top news story today is without doubt always, again, Trump and tariffs. And I got to be brutally honest, I am totally confused here as well. I know we're going to go into the reads, we're going to go into a long chat. Anyone not confused?
Are you confused about what date the tariffs take effect and when the letter writing starts?
That's part of it.
Are you confused about what he ultimately wants, President Trump?
That's part of it. Does he want the revenues or does he want the deals?
Who's friend and who's foe?
Don't know.
That's confusing too, though.
Do any of you not know? Any of you not? No? Okay, well, look, we'll try and clarify, but we'll go through our opacity, our cloudy understanding of things together. Should we all hold each other's hand on this one as well? Just check with HR if you're allowed to hold each other's hand, then we'll carry on. Right, President Trump says the White House will start sending letters to countries regarding tariffs and or deals from 5 p.m. London time today. The US leader said the letters will be sent to various countries ahead of the July 9th deadline for nations to strike deals with the US. But there's my first confusion. What happens between July 9th and August 1st if you've got deals? But Trump also hid out at the BRICS now. Wow, okay. Writing on Truth Social that any country aligning with their policies would be charged an additional 10% duty. It comes after the leaders of Brazil, Russia, India, China and South Africa condemned attacks on Gaza and Iran. So, once again, is this geopolitics or is it trade? Or are we conflagrating the two? I think I almost got that word out. And called for global reforms at a summit in Rio de Janeiro. The Trump administration has confirmed that tariffs will become effective from August 1st, with the Treasury Secretary Scott Bessent adding that duties will boomerang back to April 2nd levels if trade deals are not struck by the start of next month. Who's got a deal so far? The Brits,
the Brits
and Vietnam.
Slight deal on the Vietnamese, yes.
Yeah, so, okay, I'm confused. What do you want to say?
The deals that we got, so you started with London, you started with the UK and you started with Vietnam. Are they landmark deals for developed nations and for developing or emerging markets? Is that what we've got? And when it comes to Vietnam, the 20% charge on tariffs, and we heard over the weekend that Trump feels very strongly about BRICS, the developing market model where very cheap product has had to be made in some of these countries, shipped to the United States, upending so-called domestic manufacturing. Keen to correct that. And I think after a very aggressive approach to some of the BRICS, that's what we're hearing, this developing market, emerging market model for the last number of decades. could be in doubt here in its context, because there will be tariffs, decent tariffs applied to some of these nations coming in. Whether it brings manufacturing back to the United States, big question mark still dangling, but it means product will become more expensive for Americans no matter how you cut it.
I think you bring up the BRICS, and I think what's essential to think about here when we think about this group of nations, it started as just those 5 nations, Brazil, Russia, India, China, South Africa, but it's expanded to include a number of other countries now. And the group is essentially designed to be a Chinese counterbalance to U.S. and broader Western power. And that's an angle through which I think we have to think about President Trump's comments around these BRICS countries, that if you are aligning with them, you are essentially taking an anti-American stance. That's an overlay there. I think one thing that stood out to me looking at the commentary over the weekend is the approach that has been successful with Trump so far, and that is to take a diplomatic approach, not escalate. And this is something you brought up in NATO, that's what pays off with President Trump. That's what paid off in NATO and ultimately got that smooth agreement there. It's taking a diplomatic, not an escalatory approach. And The Economist termed it DOVE, diplomacy over visible escalation. That's the strategy that seems to be working here.
Love a good acronym. I'll pick up with you on the NATO theme as well, because how did NATO, going from being, as Macron called it a few years ago, brain dead, to actually being a really quite effective group that more nations like Finland and Sweden, who bring a lot of firepower to the table, wanted to join? How did it go from the two? It had a common enemy that basically made them all sit up and wake up and say, oh yeah, we're really still worried about Russia, ergo we need to up our defence, up our spending, and really get our act together. The BRICS, and again, talking about loving a good acronym, and I'm a big fan of Jim O'Neill. We've spoken to Lord Jim O'Neill many times over the years, but the truth of the matter is, they've got nothing in common, really. I mean, yeah, they're coming from a low economic base. Yeah, they're all industrialising at various stages, but they've got very little in common. And I think, most of the academic and intellectual evidence over the years, they've got a lot in common. So how do we create something in common? You create a common enemy. And to be honest, the BRICS are so easy to split up, for different. They're all got their own vested interests as well. But if Mr. Trump and the US creates a common cause by aligning them all as one and saying, you are all bad, then they suddenly get a purpose. They suddenly have a meaning as well. So we've got to be very careful not to create a relevance for the BRICS where it doesn't exist.
You could say that for Europe as well.
You could say that for all of these multinational organisations, because when I look at the G20, it's pretty useless at having cohesive policy because you've got 20 disparate nations who don't want the same thing. You look at the G7, it's actually pretty useless in many ways as well at getting aligned policy as well. So Trump is doing the polar opposite of what I think he wants to do potentially, and that's creating a meaning for BRICS if he's not careful.
Yeah, the other point I'd make here, there are 18 important trading partners, so that's where the Trump administration has been focused. Where does it leave the rest if you're not on the 18, on the list of 18? In terms of greater market access, that is something the administration's been keen to cut. Trying to get those tariffs down in these emerging markets, allow us to sell US product into these countries. Will they? I mean, will anyone in some of these countries want American product? Will it be the right price and the right type of products? We're going to hear from US Treasury Secretary Scott Bessent later today on CNBC. Don't miss that conversation at 1 p.m. London time. EU officials are continuing to target a trade deal with the US ahead of Wednesday's deadline. Eurogroup President Paschal Donohoe has told CNBC he is optimistic.
So if I look now for the decision for next week, the trading relationship between the US and the EU is €4 billion per day. And I'm hopeful that an agreement can be reached for next week, but none of us can be complacent. We know how difficult it can be and the twists and turns that can happen. But I know the Commission are doing an excellent job on our behalf. They have the full support of the Member States of the European Union, and I know they're doing their very best to try to secure a principled agreement in the coming days.
Let's take a look at U.S. markets and where things wrapped up at the end of last week. All three of the majors ended higher, adding to recent gains. The Nasdaq adding about 1% and the S&P 500 and the Dow not too far behind. For the week overall, the Dow Jones added 2.3%, its third positive week in a row. Last week also marked 3 weeks in a row of gains for the tech-heavy Nasdaq and the S&P 500, 2 positive weeks in a row. That index gained about 1.7% over the course of the week. On Friday, it was the tech sector which led led the gains, up about 1.3%, and that's what drove the outperformance of the NASDAQ. In terms of Asian trade overnight, let's take a look at where things stand right now, heading into this Monday morning here in Europe. You've got a little bit of red on the board for the Hang Seng over in Hong Kong, as well as the Nikkei 225. The Shanghai Composite, meanwhile, trading a touch in positive territory, and the Kospi over in South Korea up by about 0.25%. On to European futures, with a lot of focus on trade this week and how those discussions are going between the U.S. and countries around the world, including those within the European Union. This morning, we're looking at a mixed picture for the start of trade. On to U.S. futures. What's in store for the Wall Street Open? Well, we're looking at a bit of a pullback there, a retreat across all three of the majors this week. We've got Fed meeting minutes to look forward to, Chinese inflation data, and of course, those trade discussions, which we're all tracking quite closely.
Super duper. Right, crude prices. Let's take a look at where the oil complex is trading. Under a bit of pressure after 8 OPEC Plus members agreed to a greater than expected production hike of 548,000 barrels per day for August. Expectations had been the group would increase output by a smaller 411,000 barrels per day, in line with May, June and July. The group pointed to a steady global economic outlook and healthy market fundamentals. At the next meeting, Goldman Sachs expects a production hike of 550,000 barrels per day for September, putting the group on track to unwind 2.2 million barrels per day in voluntary output cuts around a year earlier than originally planned. Saturday's meeting was the first since last month's 12-day war between Israel and Iran and the US strikes on Tehran's nuclear facilities. Attention now turning to Vienna, where OPEC Plus members and industry leaders will gather for the group's international seminar. I used to love going to that one this week. Speakers will include the CEOs of BP, Shell, Aramco, with OPEC also set to release its world oil outlook for 2025. And we'll have live coverage from Vienna with someone else, not me, throughout. I know it's amazing. It's at the Hofburg Palace. You get to speak to everyone. I mean, literally everyone. David Fife, have you been there?
I'm heading there tomorrow.
Oh, take Steve with you. Poor Steve left behind. Loves a good scrum.
I don't know, he doesn't eat Wiener Schnitzel anymore, so it's a little bit wasted on him.
True.
I've introduced David Fife, but I haven't really introduced him. He's the chief economist at Argus Media, who may or may not be going to Vienna. Lovely to see you.
Good to see you.
For me at the moment, and I'm going to make it really simplistic and wrong, but I'm going to make it simplistic and you can add in the real colour. It seems to me geopolitical fundamentals versus economic fundamentals of what's driving the oil price.
Absolutely. I mean, we've seen that very clearly over the last month. You alluded to the conflict in the Middle East. We had a $10 hike in prices overnight when that happened, and that has dissipated, and all the attention now is on what's going to happen this week in terms of reciprocal tariffs, because there is a serious downside for economic growth if we go back to the sort of tariff levels that we saw proposed on the 2nd of April.
That said, and I can't do this, but I'm going to try it. If I strip out geopolitics, the price of oil has been pretty steady, but it's been at a lower level than pretty much all NOCs and certainly all the IOCs. And when I use acronyms, I delineate between national oil companies and international oil companies, i.e. the big majors compared with the big nations. I know most of us know that, but I always think we go too acronym heavy at times. But David, none of them want the price here as well, and yet with OPEC adding barrels back on the table, it seems that actually, is there a price war going on? Is that what's happening?
Well, I think there's three options as to OPEC's decision-making process. One is that they're trying to reclaim market share, which they've progressively lost over the last couple of years. The second is that they're listening to Mr. Trump, who says he'd like $50 oil, although that is...
Sorry, can I just jump in? If he has $50 oil, he can forget about the peak oil production that the US had, and dare I say it, I'm not making a political point, they had it under the last year of the Biden administration of just over 13 million barrels a day. If Trump wants drill, baby, drill, and wants US energy independence, forget it at $50.
Absolutely, it's contradictory. You need $60 to $5 a barrel for new wells in the shale space, so it makes no sense whatsoever. The third element in the OPEC equation is it the Saudis trying to teach a lesson to the sort of serial overproducers, the Iraqs, the Kazakhstans, the Russias? So, take your pick from any one of those three. The problem is it builds a surplus into the market in the second half of this year.
You know, it's interesting you talk about President Trump's drill baby drill agenda, because he also wants cheap prices at the pump. And it ultimately comes down to which does he want more, U.S. independence on the energy front or cheap gas. What's your take on what sort of trumps the other?
I think he's gone a bit quiet about the drill baby drill. I think drill baby drill, if it occurs, it's much more to affect gas supply, as in natural gas. I just don't think we're going to see very much expansion from US shale. You know, the last decade and a half, when it's driven non-OPEC supply growth, those days are behind us. You know, capital discipline is really the watchword for US producers now.
You talk about one of the motivations for this increase in oil production being to address the non-compliance in some nations within OPEC plus, Kazakhstan, for example, Iraq as well. Has their compliance improved in recent months since OPEC has begun increasing their production?
I think it depends who you're looking at. I think Iraq has probably made some moves to try and pull in its horns, as it were. I think the Kazakhs not so much. So you know, it's like any international grouping. There are different objectives, different priorities. They're not a completely homogenous group. So you know, therein lies the problem.
Where does this leave Iran with more product coming into the market at a lower price? Typically, that would have been taken up by the Chinese.
Yeah, I think since the conflict last month, you know, the Chinese have been a little bit reticent. Let's not forget that domestic demand in China is pretty weak. So, you know, I suspect Iran is going to probably have to face some downside, because I just don't think there are buyers for that Iranian oil in the volume that they were buying previously.
And what sort of relief does this provide to emerging markets? We're just talking this morning that Trump has taken aim at some of the BRICS. These are the very countries that actually are buyers of oil. So lower prices at this point, somewhat of a prop for these economies that might be facing some of the tariff threats? Well,
again, it's a little bit more nuanced. It depends who you're looking at. Southeast Asian nations, yes, will be happy. Brazil, for example, a major producer, is going to be a bit less happy with lower prices.
Dave, we've got to leave it there. Lovely to see you, although a little bit bittersweet. A little bit bittersweet, got to be honest, David. You know, you showing off, going off to Vienna, whereas I'll be sitting here with my lovely colleagues.
I'll send you a postcard.
Yeah, you and Dan Murphy have fun. Yeah, it'd be brilliant. I'm really looking forward to Dan's coverage, and I'm sure he'll see you there. Lovely, David. Thank you very much indeed for that. David Fife, of course, Chief Economist at Argus Media. You off anywhere lovely then?
I am, actually.
Where are you going?
Believe it or not, I've got another wedding in Portugal this weekend. So I'll be bidding you adieu on Thursday this week. That's it, though. We have no more weddings.
Wedding season.
No more weddings this summer.
Unbelievable.
I look forward to your input on my dress in the break.
Oh, no, the last one was beautiful.
Oh, thank you. That was thanks to Karen. She steered me in the right direction.
It was lovely.
What are friends for?
All right, we're going to take a quick break so I can get this dress shopping going. ECB policymakers giving their take on the future of the euro. We're going to be talking about that when we come back, as uncertainty around tariffs puts pressure on the dollar. Plus, Foxconn reports record second quarter revenue boosted by strong AI demand. We'll have more later this hour. And as President Trump's deadline for trade talks fast approaches, we'll discuss what to expect from the talks between Washington and Brussels with Cecilia Malmstrom, the former EU Commissioner for Trade. Tune into that interview at 9:30 BST.
ECB Governing Council member Gabriel Makhlouf has said the euro is unlikely to replace the dollar as the anchor of the world's financial system. Speaking in Aix-en-Provence, Makhlouf has said there was still a fragmentation in the system that prevented the euro from mirroring dollar strength. Charlotte joins us with more. Charlotte, interesting to get into the weeds in this conversation on the euro and what sort of context it has at this stage as people question the resilience of the US dollar. What did you hear?
Yeah, it was a really interesting panel there with some key ECB governing members talking about the role, the evolving role of the central banks and their mandate and how it was evolving. And of course, the question of the dollar and the euro and the impact of a potential growing role of the euro on their monetary policy. And so, of course, we came into that topic very quickly. And I had the chance to catch up with Gabriel Makhlouf, who's the governor of the Central Bank of Ireland, asked him for his take on the weakness of the dollar and the potential opportunity for the euro.
I think what we're seeing right now with the dollar is a realignment on the part, a readjustment on the part of investors who are seeing, it's not so much tariffs, which get a lot of headline, they're seeing the rule of law in the United States actually weaken. And they are responding accordingly, because that means there's greater risk to their investments and their assets, and they're adjusting. But I think it's a bit far to say that that's going to lead to the euro suddenly replacing it, because as I said, I don't think the euro is ready to do that.
And in that conversation, Mr. Stournaras of the Central Bank of Greece was also discussing about the weakness of the euro and the potential impact of the tariffs.
Who is going to be hurt first? I think America. So those who impose tariffs will be hurt first, and the evolution of markets and the dollar, I think, is witnessing this result. So if you combine tariffs with the attacks on the Fed and on institutions, with the questions on the fiscal sustainability of the United States following the beautiful tax bill, it explains the evolution of the dollar exchange rate in the recent weeks. I fully agree with Gabriel. The status of the dollar is not going to change from one day to another. The euro is in a position to gain share in international reserves, but using the, again, sorry to say that again, the ancient Greek saying that you don't only, it is not sufficient to have Goddess Athena help you, you have to move your hands as well. So we need to do things in Europe. We need to complete the banking union, to complete the capital markets union, to have a safe asset, to eliminate the internal barriers. So in this way, the euro can increase its share and its role in the international financial market.
Yanis Stournaras loving the mention of the goddess Athena there and saying Europe needs to do more to complete. So there are opportunities for the euro. Of course, the CMU needs to be completed in order to have a safe asset and eliminate the barriers there. But very interesting, the conversation there. You remember last week when we spoke to the Spanish economy minister who's running to be president of the Eurogroup and said that we should work to increase supply in euro-denominated assets, such as joint EU debt, to do some spending. So this is very much part of the conversation there. You know, the French are pushing for more common joint EU debt as well. And so it's very interesting to hear these central bankers say, look, there are some opportunities now, but certainly the euro is not ready to be a key reserve currency. It's not going to happen from one day to the next. The dollar is still very predominant, but it will happen, and there are opportunities.
It feels like this is the discussion that we've been having for years since the inception of the monetary union, that how far can it go just being a monetary union if we don't have fiscal union or some form of fiscal union as well? So it feels like the question hasn't moved on, but perhaps now we're at a point where there is an opportunity here for the euro to play a much bigger role as a potential reserve currency, and this could be the impetus to actually drive some of these policies further. What would, capital markets union, joint issuance, things that many market participants have been calling for years, but there hasn't been the political will in Europe to actually move it forward.
Yeah, and really fascinating comments from Governor Makhlouf talking about it's not so much about tariffs, the weakness of the euro. Say investors are seeing the rule of law being weakened in the US, and so to make their assets safer, they are changing the way they're investing. I thought that was really punchy comments and really interesting as well to see this broader picture as well of how investors are thinking.
I think my favorite line though was, it's not enough to have Athena on your side. You still got to do some of the work yourself. I just looked it up, knowing who Athena was, but just to make sure, the Greek goddess of wisdom, strategy, and warfare. So good to have her on your side, but not enough. Charlotte, thanks for bringing us that interview and great panel from Aix-en-Provence. The European Union is rushing to secure a trade deal with the U.S., with clocks ticking down to President Trump's July 9th deadline. Over the weekend, U.S. Treasury Secretary Scott Bessent said there was, quote, good progress made on talks between the two sides. It follows reports on Friday that the EU was weighing a skeleton trade agreement with the U.S. that would maintain a 10% tariff on most exports. Now, according to Politico, the two sides would continue conversations about providing relief to specific sectors such as autos. Former French Prime Minister and former EU Commissioner Michel Barnier told CNBC that Europe needs to remain firm in negotiations with the U.S.
The first point is to be united, as we succeed to be facing this nonsense divorce of the Brexit. And the second point is not to be aggressive, to answer to your question, but to be firm. Mr. Trump is aggressive against us. And frankly speaking, I don't understand. If I look at the interest of the United States, the medium and the long term, and our interest is not to be aggressive against each other. We need to rebuild, to build the transatlantic long-term partnership. For the reason I don't understand the trade aggressivity of Mr. Trump, and if this aggressivity will continue, we have to be firm, and it will be a lose-lose game, but it is the reality.
Because we saw countries like Canada, for example, drop their digital services tax, and some people are saying Europe should do the same or water down some of their rules to appease the Trump administration. Do you think that would be a good idea?
I think we have to be respectful because we are allies. Alliance doesn't mean allegiance. But if there is still U.S. aggressivity on trade, I think the Europeans must be united and firm and respond.
What does that mean in terms of Europe's relationship with China? Because we know for a while they were talking about decoupling or de-risking the relationship with China. Now it looks like some European countries like Spain want to repivot towards Asia. What's your view? Is that a mistake potentially?
I was in China a few weeks ago, and what the big countries doing is impressive. So we have to be very realist face China, but I think we have a reason to keep a good relation with China without any kind of naivety. And what I said in my speech at this conference in Beijing is simply to say that we are ready at the European level to define our interests, strategic interests, independently of everything, independently of our relation with the United States, independently of our past. We are looking where are our European interests and to protect these interests. And my last sentence was, I think that great country like Russia is able to understand what I mean. We need to be able to define our interest independently.
Michel Barnier there. Let's take a look at futures as we count you down to the start of the trading session. And the early picture does look positive for the DAX only. The rest of the market, slim ranges. Don't forget the US returns to the trading day today. So we may get a bit of a steer on direction later on.